Welcome to the Comstock channel. My name is Brian Hendrickson. We are already at Wednesday, which means Joe Camp is joining us for the midweek checkup. Welcome.
Thanks. Welcome to a not so hot day for the market again here today, unfortunately.
So, kind of talk to us about why we're still seeing that, and is some of this from the crop report that we had Friday?
I think that is still something that's hanging over this market, spilling it into this week here after Friday's numbers were so bearish. It starts with the USDA yield estimates that came in as a shocker, much higher than anticipated. I know you had the recap there from Justin and Matthew last week, so I don't want to delve too much into what that report said, other than maybe to point out a few things where I think the USDA got it wrong. And, that comes with the caveat that we have to trade with what we've been given here. But if I can pick into this report, at least we could come up with potentially some items that could change in support of this market from here. So there is the idea that maybe, we've got the bearishness really dialed into this report, and future updates could lean friendlier here. And it's not going to be the corn yield estimate, unfortunately, that changes because of this January crop report being the summary report for the year. This will be the last chance to see these revised for several months. Now, it has happened in the past, now to the frustration of many, especially when this corn or soybean yield is going to be dropped lower potentially come August or September of this year. It doesn't do anything for us now. But I brought up the corn yield. It was the big dagger of last Friday's report, 177.3 bushels per acre. We can see at the top right end of the chart, representing a record high for yield. I just, I'm hard pressed to believe that the national average was a best ever yield given the drought stress that we had for so long this last season. Now, that's again recognizing what we've had to say now for several months, and thankfully so, that this crop was so much better than we feared it was going to be. We can talk about genetics playing a part here. Ultimately, some late season rains really helping out to finish this crop off. But I can't, reconcile some of these states like Iowa being better than they were a year before, given particularly like in the eastern half of that state, along with, say, northern Illinois, where there were some real trouble spots for yield. Yet, okay, what do we do from here? And that's potentially just the other portions of the balance sheet, potentially demand. And if we think about U.S. crop demand, what really is going to come into play here is, the outcome for South American crops, and primarily here Brazil, which was another qualm I had with this USDA crop report, and not unexpected, right? We've had that warning put out there because we've dealt with this in the past, that, hey, USDA is going to take a while to move lower on these South American production estimates. But it still doesn't explain why we'd have such a huge gap between the USDA numbers up here and the rest of the trade down here. And that there's another example of that yet this morning, with a satellite-based analytics firm coming out with a soybean crop number for Brazil under 150 million tons, and that's more than 7 million metric tons below the USDA. Brazil's own CONAB agency, we talked about this in the preview for the report last week, that they came out with a corn crop estimate of 117 million metric tons, and that's 10 million metric tons below where the USDA was at on Friday. So that's a frustrating part that we had. But, one thing I wanted to bring up here is this rainfall map for Brazil over the last 30 days. And we can see some tiny spots of green where they finally caught up with some moisture here and caught up and went ahead ultimately from where a normal rainfall percentage would be over this last month. But all of the red represents still where a drought has persisted. And that's why we're going to have an impact on this Brazilian crop. And again, if we look down the road, that could be the potential trend changer here for us, is that a smaller crop in Brazil leads to better demand, particularly from China on the export front.
How long do you think we're going to see this connection of the USDA's reports and kind of the market playing hand in hand? How long do you think you're going to see?
I think the exports are the biggest thing right now because, again, they're linked to what we're seeing out of Brazil. They're linked to the decision making from Chinese importers. And again, that's the catalyst that could potentially shift sentiment here, is that China starts to come in and buy this market. And they're more likely to do that, one, if the crop problems in Brazil persist, and two, if we have some response to these recently lower prices. I mean, that does a lot to restore competitiveness after you drop the corn market 50 cents and soybeans by a couple of dollars now over this last month and a half or so. But until we get that confirmation of Chinese export interest, it's going to be still more of the same for this market, like this morning was, in terms of not having another daily export sales reported like we were watching out for. And that's the counter. It's been since December 19th, almost a full month, that we haven't had a soybean sale reported. We've had a couple of corn sales to Mexico announced, but again, none of that demand from China. So I really think that's what it takes to look better going forward. If I show you the graphics for where we're at in terms of Chinese purchases, we can start with corn and see that we're not behind in terms of where we would normally expect to be at this point of the year, but we haven't had that indication that sales are ready to ramp up like we normally start to see by now. It's not until late January. You can see that in the blue line for last year and the green line for the past 5 years. It's late January, February, and March that in the past we've started to see these purchases from China on corn really pick up. So that says they could still be ahead here, and that would be what this market is, I believe, waiting on for better news. If we show the soybean export chart, these are soybean sales to China. We can see that we're above the 5-year average in green. The red lines are current year-to-date soybean sales. Compared to last year, though, we've fallen behind, and that's not totally unexpected. The exports for beans are going to be lower this year in total because, in part, we're rationing demand with a processing sector that is, by all accounts, firing on all cylinders. And that was a reminder given to us yesterday as well, where we had a record monthly crush total reported from the National Oilseed Processors Association. We're really chewing through soybeans. And so if all of a sudden China does step in because they like the price, because they're worried about what Brazil won't have available here, then that's all of a sudden going to be more competition for processing, for processors in a market where we're already relatively tight on soybeans. So even though it was a bearish report on Friday, seeing the carryout adjusted higher, it's left at a historically tight level such that if it gets any tighter, we're back to seeing likely a pretty positive price response. So, that's maybe taking the negatives and turning them around to what could potentially be a friendlier move ahead if we've, by all likelihood, maybe priced in the worst of it.
So when do you start getting concerned? Because like you said, we haven't had a big export in almost a month. Are you starting to get concerned at all about not having any? Or I know that you showed the map or the graph, and we're kind of in that low point as is, but we're also not seeing anything. What's your concern about that, if any?
Yeah, the concern is going to be, like we had a whiff of here this morning, that the Chinese economy is moving downhill fast, and that they're not going to have the same demand that they've had in past years, and that potentially maybe they're going to have enough to be able to source from Brazil, even with a smaller set of crops here out of South America. Maybe they'll have enough. So that was part of the negativity that got into outside markets today. Some weak Chinese economic data, maybe lending some pressure for stock markets and also rallying the dollar further, and that's a problem. So that's always going to be the real risk point here, is that if the economy as a whole falters and then we have a sort of overall risk off attitude that extends itself over this market. But I'll flip that now into just being more positive and saying, like back to the report, I don't believe the USDA's numbers, quite frankly, on where they put Chinese corn and soybean inventories at, corn in particular. And I think that they need the grain enough that they're wanting to stockpile here in such a way that we're going to start to see that demand return, and that's going to be the friendly spark. But until we get that, I mean, if it's another several days that we don't have any export sales pop up, we're going to be at risk of continuing to slide lower, and it'll be more about testing technical points and finding value from that standpoint, as opposed to being reminded of the fundamental positivity that I think can still be ahead, and as so far as better demand is concerned.
All right, wrapping up. Do you want to add anything else? Stay
Only
positive.
that I want to present the bearish case and understand why we're continuing to slide lower here, but hopefully leave everybody with some optimism that, okay, it could be just literally days ahead that we start to see big buyers like China step into this market and find some value so that they lend support and stem the sell-off.
All right, that'll do it for this episode. Thanks so much.
Thanks. See you next week.
You can find us on Facebook, YouTube, and TikTok.